Hi, welcome to lesson 2 of how to trade head and shoulder with an edge. In this video, I will show you how to trade and identify inverse head and shoulder. For those of you who have watched lesson 1, how to trade head and shoulder with an edge, you will understand better. This is a live chat, and in this live chat, I'll be showing you how you can identify a head and shoulder in a chart. Now, the first thing to do, because in this video we're talking about inverse head and shoulder, that means the trend is on the downside. The market is on the downside. If the market is going down and the trend is on the downside, all you need to do first is to look for the lows in the market. Now we can see from this point, the price went down. It was bearish here, and the market pulled back. Long leg, short leg, long leg, short leg, and here there's a failed swing. So at this point, we have a low here, we have another low, and we have a low, and we have another low. Here we have a low. But this is a higher low. This low is higher than this low. Now, how do we know that this trend is on the downside? Now, if a market is creating lower lows, a series of lower lows, this is to show you that the trend is on the downside. Now, if you check, we have a trend line because we have A, B, C. For those of you who have basic knowledge on how to trade, you will know the ABCD in Forex trading. So ABC. Now connecting A and C, we have our trend line going down here. And then you can see the market's on the downside. Now with the help of MACD here, you can see that the MACD is below 0. So you can see here, this is a confirmation that this trend indeed it's on the downside, because at this point we can see that the MACD is above 0. That is why we have a higher low. But from this point, the market has been creating lower low. How do we know this is lower lows? This point is lower than this point, and from this low is lower than this low, and then from this point, this low is lower than this low. So you can see series of lower lows, but at this point, the low fails. So what do we do to identify a head and a shoulder in a downtrend? Now, if you have series of lows, you want to see where the market failed to create another low. So at this point, we can see at this point the market failed to create another low. So at this point, we want to pay attention. We want to see what the market is doing. And with the help of this filter, we can see that at this point, MACD is above the 0 line. So now that the MACD has crossed over, if you pay attention, you will see that the MACD crossed over at this point where the market failed to create a lower low. So this is a signal, and from this point you can see and look at the other side to see previously what happened. And if we can see at this point, we have a shoulder here, and then we have a head here, and we have another shoulder here. So we can see this is shoulder, head, and shoulder. But the beautiful thing here is that this happened after a downtrend. So we have a downtrend and we have a head and shoulder. Why do I say a downtrend? Because the market went down, right? The market went down. So this is a downtrend. We have series of lows, and at this point, the market fails to create another low. I repeat again. So at this point, we want to take this into consideration and look at this point to see if we have a low that corresponds to this low. So we will look at that and say, okay, do we have a head? If we have a head, then we can see that there is head and shoulder. So now if we check clearly from this point, you can see that this point and this point is a neckline, right? So we have head and shoulder and we have neckline. So now let's draw the head and shoulder so that you can see clearly what it looks like. So from this shoulder, if we have to draw this and then we go like this, right? Then we go like this, and then we have a shoulder here, and then we have another shoulder. So you can see that we have a shoulder, head, and shoulder. Okay, imagine that this is the eye and this is the mouth, right? So we have shoulder, we have the left shoulder here, we'll have the right shoulder. Yeah, but since it's inverse head and shoulder, automatically it's supposed to be the left shoulder here and the right shoulder here, but either ways. So this is head and shoulder. Now, if you look at this clearly, we have a neckline here, right? So if we have a neckline here, a neckline here, right? So we have a neckline here. Now we can see that at this point, the neckline was broken. And most of the times when the neckline is broken, you will see the market coming back to retest the zone before the market pull to the upside. Now at this point, you can see that the market push up to the upside and then pull back a little bit, and now the market is struggling. So this is a zone, and if you look at that, at this point the market find a support at this point. So this is a support here, and then here we have a resistance, right? We have a resistance, we have a resistance here. So we have a support here, we have resistance, and now the market break through the support that changed to a resistance. And at this point, most of the times what happened is you see the market go up and then come back, test the zone, and then go up. So most of the times, this is how the market move. The market move to the upside, come back and test the zone, and then the market move to the upside. So from this point, if you watch my lesson 1 video on how to trade head and shoulder with an edge, you will know that I said the way to trade and make profit is to first measure from the head to the neckline. So if you check from the head to the neckline, for instance, if here is 100 pips from this point, then at this point from the shoulder, you're going to check to see 100 pip to the upside. And then when you put this 100 pip to the upside, you will take your profit level 100 pip from this point to this point, somewhere around here. Now your stop loss is going to be like 50 pips, half of your risk, because you're looking for low risk, high reward ratio. So let's say 50 pips will be somewhere here, right? If you're using stop loss for 50 pips and you're using take profit for 100 pips, then it makes sense. So here, let's say we have stop loss to this point, right? Stop loss here, and then your take profit to the upside, which is 100 pips, right? Take profit will be here, 100 pips. So if your take profit is this point, TP, take profit, TP, 100 pips, and then here you will have your stop loss 50 pips. So at this point, let's say plus 100 pips is going to be your take profit, and then your stop loss is going to be 50 pips. So at this point, you want to put minus 50 pips, so that if the market goes against you, you will lose 50 pips, and that is low risk, high reward ratio. So your stop loss here is 50 pips if the market goes against you. Now you can see with this concept, now the market came to this point, bounce around the zone, and the market is pushing to the upside. Now you have 50 pips of stop loss here. Now if you lose this 50 pips, there's no problem, because if you keep doing this, you will see that the market will always go in your favor if you do the right thing. And even if the market go against you, you will lose 50 pips. So each time you're winning 100 pips and you're losing 50 pips, imagine if you win 3 trades, you are going to make 300 pips. And if you win, like I said, 3 trades, 100 pips, and you have 6 trades in a row, and you lose 3 trades, right? The 3 trades you lose will be 150 pips, and the 3 trades you won will be 300 pips. If you do 300 minus 150, it's going to be 150. So you still be in profit. This is the edge the professionals have over amateur traders. Now 300 pips minus 150 pips is equal to 150, right? So if you have 3 trades, you have 6 trades in all, you won 3 and 3, you lost 3 trades. So amateur trader might be thinking, if I win 3 and lose 3 trades, I will end up breaking even. But professional traders, they always trade with low risk and high reward ratio. So even if they have few win, they will end up breaking even, or they end up in profit. So like you can see here, if you are trading 1:1 and you win 3 trades and you lose 3 trades, you will end up with nothing. But because this is not 1:1, this is 1:2, it's like I want to lose 1 and I want to win double of what I'm planning to risk. My risk here, if you are trading, let's say your risk here is $50 or euros or pounds, it depends on where you are, and here you are placing double to be your take profit. So that's 1:2. So if you are trading 4 hours, you're trading on a daily time frame, it's easier to trade on 1:2, 1:3, and using the power of trailing stop. So when you have head and shoulder, in order not to be confused, even if you're upside down, even if we are talking about inverse head and shoulder, this is the left shoulder and this is the right shoulder. Now we have the neckline. The neckline is broken. The neckline is broken. The market push up to the upside, come back, test that zone. Now normally the market will go to the upside. So what do you have? Like I say, you measure your head, the head here to the neckline, and we can see that it's 100 pips. And from this 100 pips, you want to take this to be your take profit. And you want to take half of this to be your stop loss. Now it depends if you are on a 1 hour chart or 4 hour chart or daily chart. It all depends. I'm using 100 pips here and 50 pips here as an example. But if you are trading, for sure, it's not going to be 150 pips for stop loss. It all depends on your setup and the time frame you are trading on. So this is the summary. Trading low risk, high reward pays. So if you want to trade, if you want to trade and be successful, to be on the winning side, always look for setups that is going to give you high reward. That is the way you can succeed. Professionals do always lose, and it doesn't mean that they win every of their trade. It's just that they have low risks and they have high reward. So with that, it becomes like a magic. If you're trading low risks always and trading higher reward, you will see at the end of the day that you will become a profitable trader. So if you want to take your trading to the next level, try trading with low risk, high reward ratio. Now, check out and watch out for my next video, and I will be more than glad. If you have questions, you can just drop it on the comment. If you like this video, click like, and if you haven't subscribed to my channel, subscribe for more videos. Happy trading.